Thanks for tuning in to Talking Point. I'm your host, Niraj Shah. The current environment offers unique growth and asset safety tailwinds to gold financing companies, which is frankly a rarity amongst lenders currently. The question is, would a ROE potential of over 25%, trending gold price tailwind, and low asset quality risk or relatively lower asset quality risk lead to better and sustainable growth opportunities for the gold finance companies and for Muthoot Finance in particular? Let's get in the management of Muthoot Finance to talk about that. Mr. George Alexander Muthoot Johnson right now to speak about all that and more. Good having you, Mr. Muthoot. Thanks so much for joining in. We'll get to your results in a bit because I have a few questions about the quarter gone by as well. But just a comment on this whirlwind rally in gold and the kind of options or the kind of possibility that it lays out for you. Is it a double-edged sword, or do you believe that the stage is set for you to continue your lending practices in a better fashion over the course of the year?
Thank you. See, gold loan has been the choice of many borrowers all through. Over the decades, gold loans have been a choice for them because it is one of the most easiest loan and convenient loan for anybody today, especially in today's environment and scenario where people are not able to get through loans of from other lenders, especially NBFCs and even banks, the personal loans, the online loans, probably even the vehicle loans and the housing loans, etc., are not easy to come by. So at this point of time, this is much more in the minds of people, or much more people are looking at gold loans as a quick and a fine option for getting money with the collateral which they already have with them. And mind you, we take only ornaments which are used by people, household used ornaments, which is available with everybody.
Yeah, sure. Okay, so how do you see the current environment, Mr. Muthoot? Because I mean, when I juxtapose this whole rally in gold prices and the kind of options that has opened up, or the kind of comfort that it gets you because you are essentially gold financing, and at the same time, when I look at the quarterly numbers and see that despite the rally in gold prices that we've seen, the quarterly AUM hasn't quite shown that growth. So what's happening on the ground? And was it a function of the lockdown quarter which did what it did, and will it change, or has it already started showing signs of change in the current quarter?
Yeah, you're right. The lockdown, actually, gold loan happens when the branches are really open and functional. See, in from end of March, the last week of March to maybe almost full month of April, the branches were not open. Once the branches got opened, business started picking up. So the first quarter has seen the impact of the lockdowns. But as we speak, the going is very good. The growth is extremely good, and we had given a guidance of 15% for the whole year, and I am sure we will be easily surpassing it.
Hmm. I'm just wondering though, when I look at the statistic, and I'm borrowing this from a note by Kotak, which is making the point that the tonnage declined about 6%, and their assumption is this is on the back of the higher value of the pledge gold for customer who rolled over, but uh, because of the funding constraints, the tonnage declined despite the numbers staying the same. So would that be a fair assessment?
No, I think we are getting a little wrong because all
Okay.
gold loans, the tenure of the loan is only for average 4 months only. So people who have taken a loan quickly take it back. They take back the gold, they close the loan, and they take a new loan next time. So when they come for the new loan, what happens is the new loan is priced at the present price. What they have taken back earlier was at the earlier price. That is why the tonnage difference is there. People want 25,000 rupees or 50,000 rupees. They come with an X amount of gold. So if they come for 50,000 rupees, instead of pledging 4 bangles, they may need to pledge only 3 bangles today. That is the difference we see. It is not that people rolling over. Nobody rolls over a gold loan. They take it back, keep the gold with them, and come back and take it later because there is no entry load, there is no exit load. The interest is only on the actual number of days. So people generally tend to take back the gold. Whatever gold they have, they take it back, they use it, and again come back after 2, 3 months. It is not the rolling over which happens. So the new loans are priced at the new LTV rates. That is why you see the lesser tonnage of gold.
Okay. So you are saying that that is not because of funding constraints from your end, but because customers come with a particular fixed price of loan that they want, and if the gold prices were lower, the tonnage could have gone higher because they would have still wanted the same amount which they had taken earlier. Is my
You are perfect.
assessment correct?
Yes, perfectly. You're perfectly right. That is what people come. They want 1 lakh of rupees. They come with the gold. So instead of they may take back or return one chain which they don't need to pledge. That's what actually happens. They come with X amount of money. It's not that they come with a gold and take maximum and maximum. If they want really the maximum, they go and sell the gold, that you get the maximum. Why take a loan? They take a loan because they feel that after some time, I'm going to get money, I'm going to take back my ornament and probably return it to the family. That is why they take the loan.
Got it. How is the business environment looking like, Mr. Muthoot, currently? Because we are grappling with a lot of losses of jobs in the white collar arena for sure. Arguably, it would have happened in the blue collar arena as well. And while rural was holding strong until maybe June, we've now started seeing micro lockdowns, more cases in rural area as well, and certainly there's some job losses out there too. So how is the environment for lending looking like currently, and the environment for asset quality? Though you are relatively hedged, but just make a comment on the industry at large.
See, as far as the gold loans are concerned, people need money to restart their business. Actually, small business are a mainstay. SMEs, small business, traders, shopkeepers, they are our mainstay. So they all want to restart their business. They are not getting money which they are wanting to get. They want to stock money. Today they want to stock money for the Onam season or for the Diwali season. They want to stock up, so they need money to purchase goods. So they, some of the payments which they expected from somewhere may not be exactly forthcoming at the correct time. So short term they definitely require this money. Of course government is also trying to help them and helping them, but some of those loans from the banks, etc., or NBFCs take more time. This we can give in a jiffy, that is 5-10 minutes we can give a loan. That is why we see for restarting the businesses, etc., is what we see the gold loans are today. But to answer your point on the economic outlook, see, yes, there are job losses, the businesses, etc., are not really starting up. But I feel, to me, in the next 2-3 months or 3 months, things should start looking up. People should start spending more. Today they are not spending; they are spending only for essentials. So probably they will start. They will start some more spending, so that the economic activity will perk up. Probably, to my estimate, in the 3-4 months, things should certainly start looking up.
In which case, I heard you mention about the loan growth targets that you've given for the year. Is that a base case scenario, or is this the optimistic scenario that you're giving with the presumption that the economy will pick up?
See, the economy picks up, definitely our growth will be better than what I said. It will be better than
Okay.
15% if the growth picks up. Because if the growth picks up, there'll be even more demand for loans and gold loans. See, today what is happening because of the gold price and everybody talking about gold price, and the price of gold has gone up. What jewelry you had worth 10 lakhs, today it is worth 15 lakhs. So people are now thinking of jewelry. So while thinking of jewelry, some of them may think of jewelry to pledge and take a loan also. So that is the good thing we see, and many banks are also starting to uh, advertise about gold loans, etc. All these things are actually increasing the total market. The market is increasing. There is a huge market for gold, which gold ornaments, and I see great potential. Even more players coming, the market will certainly expand.
You don't foresee this change in the LTV norms for NBFCs versus banks to impede your growth, is it?
No, I think, there was a time when there was no LTV cap on gold loans. So gold loan, there were only few companies, only two listed companies in the gold loan sector, and very few organized players in the gold loan sector. That is at one that time in 2012 or something. that Reserve Bank came with a loan to value when previously there was no loan to value. I think after a lot of research and not research, their thought from their side, certainly research also, they fixed the LTV for everybody at 75. I think that's a fair LTV, and going above that to me is not wise. It's not
Hmm.
wise. 35 is a good one. So, but having said that, yes, permitting banks to go up to 90%, I do not know what was the thought behind doing that. But if certainly seeing NBFCs and banks as a different set of players, a different set of rules, that pains us. Although we wouldn't want to give 90%, even if they give us 90%, our risk matrix will not allow us to go 90%. So certainly Association of Gold Loan Companies will not go the 90%, not interested. But we were only pained that we were seen as different from banks as far as this is concerned. That's the only concern we have.
Yeah. Well, actually, I mean, my conversations with a few analysts and people who watch the banking sector seem to suggest that even banks who are risk prudent will not take any kind of advantage of this increase in 90%, because it might be very, very risky to do that at the current gold prices and with the percentages. Would you believe that would be the case?
Yeah, see, I was asking, talking to some of my friends also. If I were the chairman or the MD of a private sector bank or public sector bank who had been given 90%, I wouldn't permit my bank to lend 90%.
Okay, fair call. I have a couple of slightly long-term questions, but before that, just one question on the performance of the subsidiaries as well. And you would yourself admit that maybe because of the way business is, but they haven't, none of your performance of the subsidiaries, and please correct me if I'm wrong, have been quite up there, so to say. Would you believe that for the time, with the kind of economic scenario, growth out there in those fledgling subsidiaries might be a bit too much to, or other businesses, excuse me for using the term subsidiaries, but other businesses might be a bit too much to hope for?
Yeah, you're right. See, when we started the vehicle finance or the home finance, we wanted to give our customers, our big gold loan customers, which is 90% of our business, is gold loan. So we wanted to offer our customers some of these products for which they were going elsewhere. That is why we started this. We were going in a very calibrated way only. The total subsidiary exposure was only 10% of our total business. And this year, even after only after September, we will take a decision on how to go about with the further lending, etc. As of now, the vehicle finance, housing finance, we are not actually started really lending at all. So we will see once the moratorium is lifted how the customers are behaving, and then only we'll take a call on that. So our decision to go into subsidiary was not just to start a subsidiary; it was to offer the same thing to our set of customers. So a good part of our business in the subsidiaries also come from our existing gold loan customers. We wanted to retain the customers. That is why we thought of this in the first place. So to answer your question about how the subsidiaries are doing, yes, the subsidiaries, along with all the other housing finance companies and vehicle finance, they are going through the same growth and the collection and the moratorium issues that is there with our subsidiary also. But we have taken a cautious attitude. So in this year, just as I said, we will be having 15% plus growth in the gold loan business, and the subsidiaries will take a decision on that only after September. As of now, uh, it is what's it say, neutral. It's not growing at all. It's only collections which are there.
Okay, last couple of questions, Mr. Muthoot. One is, yeah, I mean, so this is what the chart says. Two things that people, at least a couple of brokerages that I read, believe that one, your AUM growth may moderate going ahead over the next couple of years, 2 or 3 years, and two, that they believe your yields are above the long-term averages, and because yields may come off, NIMs may see compression starting FY22, FY23. What would be your thoughts on both of these assumptions?
See, our NIMs are today high because one, we have sufficient own capital with us. Actually, we have 25% capital adequacy, which is very, very high. That is one of the reasons are made. But if you look at the spread, we try to keep about 10% plus or minus 1% is the spread that we have. We will continue to do that. We will continue to retain that spread for our business, and I'm sure we'll be able to do that. As of now, we are seeing the cost of incremental borrowing coming down by more probably about 100 basis points. It will come down in the almost coming down, and the next quarters also it will come down by minimum 100 basis points. That happens, we will trim our yield also, so to pass on the benefit to the customer. We will be looking at our net interest margins. That's what we will be looking at.
Okay, so you don't believe that NIMs will compress. Am I getting that correct?
Yeah, because this is a small ticket loans. These are all average ticket is 50,000 only. The people are not that interested. Probably somebody who is taking a 10 lakhs loan or a 20 lakhs loan or a 30 lakhs loan may be very interest sensitive. This is more of a convenient loan, quick loan where people get the money in 5-10 minutes. Always convenient, etc. And for their convenience, we actually do such a lot of things like online payments. We have already even started the loan at home that you don't need to come to our branch. We can come to your house and collect. So all these things we do to retain our customers. So it is not simply the question of yield or the interest rate which brings customers to us. It is also the convenience, the trust, the reliability, etc., which I think we have a fair amount today in the market.
No, sure. I mean, Mr. Muthoot, sorry for just sticking on this one more thing. The reason why maybe people might be interested in this is because since the yields are significantly higher than long-term averages, are you kind of trying to say that you moved to a new normal in terms of yields?
Yeah, the yields may come down, but our cost of borrowing will also certainly come down.
Okay. So NIMs will not get impacted. Okay.
No, we hope
Okay.
to. We'll try our best to retain that needs.
Okay, fair call. One last question, and that is on, the what your stock would do would also be a function of the valuation multiples attached. And I would presume a fair assessment, but you would be best to answer this and give us the long-term picture. I think the assumptions are that again that because your business is cyclical in nature and in a way connected to the gold prices as well, it will be wrong to believe that the ROEs that you're enjoying right now would be the ROEs that will sustain for the long term. And therefore, the valuation multiples might be different at some point of time in the future. I don't want to get into valuation multiples, but can you talk about the ROEs and how you reckon they would behave over a period of time from where
See,
they are right now?
the ROE we are seeing now probably is a little too good, but I'm sure it will stabilize around this late level only. Probably a very slight contraction, which may happen, but I don't think it will really change much going forward also.
So, I mean, I have seen the range, if I'm not wrong. I mean, the peak is 28%, which is currently, it was maybe as low as 14% as well. You are saying that, unless I'm wrong, right? Because I've seen in the past those numbers, the charts show that. My question is, you are saying that your ROEs will sustain in or around the 28% mark, 25, 28%?
Yeah, 25, that range it should be sustainable.
Okay, great. Thank you so much for joining in today and giving us your thoughts and wishing you all the best for the remainder of the year, Mr. Muthoot. Thanks so much.
Thank you. Thank you.
And stay safe, of course, more importantly. And
Thank you.
viewers,
Thank you.
thanks.
Thank you.
Thank you. And viewers, thanks for tuning into this leg of the Talking Point.